So, hi everyone, this is Hitesh, and today I am going to start a new series in which I will teach you about the valuations part, how we can calculate the valuations of any company. This is the first video, and after that you will get to know how we can calculate the valuations of the company and how the companies calculate the valuations and how different parts and sub parts of the valuation parts and how many different types of methods of valuation. So this is a comprehensive course that I am making in this video, and this is my first video, or like first video of this course. So yeah, this is very basic and I keep it very short, this video. But after that video I will make a long videos around 10 to 15 minutes at least. Okay, so let's start without any delay. So first of all, there are some you know formulas that you need to understand. Is that first of all, yeah, just let me, yeah. So there are some components of the financial modeling. First of all, to know the valuation and to calculate the valuation, we called it financial modeling, right? So but there are some components in the financial modeling. First of all, these are the basic component that you need to understand. I think numbering I made it wrong. Here it's a 5 or 6. I put the numbers wrong here. Yeah, it's okay. Okay, so there are some components that you need to understand, and these are basic components if you are from the commerce background. So these are just basic components that you can see, that which is income statement, cash flow statement, balance sheet, depreciation schedule, working capital, and debt schedule. By comprehensive all these statements at the end, we will go further to make the financial modeling by the using of a different valuations method. But first of all, we need to get the information from all these statements like income statement, cash flow statement, balance sheet, depreciation schedule, working capital, and debt schedule. So what let's talk about the income statement. So as I said, if you are a commerce student, that you are most probably uh, very much clear about that. uh, there are some income statements, basic uh, you know basic terms that you need to understand, which is revenue. What is revenue? So revenue is the total, like gross, like number of units that you sold, and at which price you sold. If we multiply both of it, we will get the revenue is the total income that the business is generating from providing its services or products to the customers. So the revenue is the total revenue, total income. It's not net income, it's a total income. It also included the cost of the product, which is in the price, which is included in the price, right? So this is the revenue. Now coming to the cost of goods sold. So cost of goods sold are the other other expenses that that you expenditure to make that product. It's called cost of goods sold. For example, inventories, raw material, and there are so many different types of labor and direct labor. There are so many types of good cost of goods sold that you incur to make the product, right? Next one is the gross profit. So gross profit is how much profit, like profit percentage on every product that you earn by selling one unit of your product or services in the market. It's called gross profit. I will just if you are not from commerce background, so don't worry, I will explain it by one in my further videos. I just give you a glimpse about that, uh, so that you can just well verse with the terms. And the next one is the operating expenses and the other income. So the operating expenses operate the business, like for example administration expenses, marketing expenses. There's a lot of operating expenses to operate your business. Not not it's a direct cost included in the product, in making the product. It's just an extra cost that you incurred to operate the businesses. This is called operating expenses. Now another thing is the other income. Other income, it means that there are so many other services that the business provided, rather than it's not a core product or service. For example, Apple provided its iPhone, and major revenue comes from the iPhone, but they also provided their service center, and and more than 40% revenue also come from their service center. And mainly it is not the their services that they give, it's including the other income, right? So there's other source, there are income from other sources also that the business get as a revenue. So all these income come under or fall under the other income, right? So next one is EBITDA. EBITDA means earning before interest, tax and depreciation and amortization. It means a bit, yeah. So it means like difference between the revenue minus the all types of cost except depreciation, income tax and amortization, right? It's just EBITDA. And after depreciation and amortization, I know you are very well versed with that. Depreciation is the accounting for aging and depletion of current assets, and amortization is also for, which is for non-current assets such as patents and copyrights, right? So after, if we deduct depreciation and amortization from EBITDA, we will get EBIT. EBIT means earning before interest and tax. Okay. And after deducting the interest, like if you take, if the any business taking a loan and on which they have to pay the interest, it's called interest. So this that cost is called the interest. And if we deduct the interest from EBIT, we will get EBIT. EBIT means earning before tax, because we didn't deduct the tax yet. And after, if we deduct the tax, we will get the EBIT, which is written here, EBT. Now, just wait a minute. Yes, so these are the two basic formulas that you can learn that will help surely in future while making the valuations model, which is profit is equal to revenue minus tax, and the net income is equal to profit minus tax. Profit, as I said, if we deduct, okay, so what is called profit? Profit is called EBIT, right? This is called EBIT. At the last point, EBIT, earning before tax, right? Or if we, no, sorry, yeah, earning before tax. If we deduct EBIT minus tax, अगर हम EBIT अगर हम tax minus करते EBIT में से, we will get profit. This is called net profit. Net profit means all type of cost, whether it is a taxable income and whether or depreciation, amortization, and every type of direct indirect cost. If we deduct from the revenue, we will get the net profit. How much company earn, which directly show up in the EPS. Like how much money will give company will give to its shareholders, whether it is a profitable or loss making company. And the second thing is about the net income. Net income, as I said, profit minus tax is equal to net income. So yeah, I am just yeah. So this is what all I want to say for for today. In the next video, we will start from the income statement to understand these terms first, and then we will go further to understand the valuations part. Yes, it takes time, but the whole course that I am making right now, uh, I'm very sure that you will learn a lot, and also this will help you in the interviews, because mainly in the interviews, which is mainly into the field of finance, they will ask this type of questions or this type of basic terms, whether you have a knowledge or not. So please keep it all this in mind. तब तक के लिए bye bye, and let we will meet in the next video. Thank you so much.